Hi everyone! On this video, I am going to talk about the common terms used in life insurance. Those who are new to life insurance may find some terms jargon. It is good to know these common terms before consulting with your financial advisor in order for you to understand further what he or she is talking about. I am going to list these terms alphabetically, and I'm also going to place the timestamps below. Account value. This is the value of your investment on any or all of the funds you own. For policyholders who have investment-linked life insurance, wherein a portion of your money is placed into an investment, and this account value is its current value based on the market or the fund that you've placed your money in. This is equal to the number of units you own multiplied by the unit price of the fund. Attained age. This is the age at which you're able to take action. For example, to withdraw funds or receive benefits. This is calculated on your current age based on your nearest birthday. Beneficiary. This refers to someone who will receive the proceeds or the money from the insurance company. There are two types of beneficiaries. One is the primary and one is the secondary. Let's say Mr. A gets an insurance company and he selects his wife, Mrs. A, to be his primary beneficiary and their only child, baby A, to be his secondary beneficiary. So in the event that Mr. A dies, the proceeds of his insurance policy or his death benefit will be given to Mrs. A. But if Mrs. A also passes away, the benefit goes to the secondary beneficiary, which is baby A. Also, when selecting a beneficiary, it may be one or more persons. For example, when Mr. A dies, he wants all his family members to have a portion of his benefit. He has a wife and a child. He can distribute his beneficiaries, like say 70% to his wife and 25% to his child. That is also possible if Mr. A has another child. He could distribute them, say 50% for the wife, 25% for the child, and 25% for the second child. And once you get an insurance policy, you may also update, edit, or delete your beneficiaries in the future. For example, you are currently single, 20 years old, and then you get an insurance policy. Most likely, your beneficiary would be your siblings or your parents. Once you get married, you'd most likely replace your current beneficiaries to your wife and then later on to your children. So that is possible. Benefit. This is the amount of money that the insurance company will pay you according to the terms of the policy. Basically, this is the reason why you're getting an insurance policy in the first place. Benefits can either be living or death benefits. Death benefits will go to your dependents or your beneficiaries, and the living benefits, of course, will be benefited by you, the insured. Cash value. This is the amount that the insurance company pays you if in case, for example, you cancel out your policy. So there may be circumstances that you're not able to pay or continue your policy. You won't go empty-handed. Typically, this is smaller than what you've already paid for. Cooling period. This is the period of time that you're able to cancel your policy for free. Let's say you just got an insurance policy and suddenly you changed your mind. It's usually limited to a short period of time, like say 15 days. Death benefit. This is the amount of money that the insurance company gives to your dependents when you pass away. Your beneficiaries will receive any proceeds from your insurance policy. Dividends. An insurance policy dividend is a sum of money that is given to us by the insurance company when the company earns extra profits or when the policy earns profits. This is not guaranteed though. Face amount. This is the amount equated to the worth of your policy. Typically, this is also the death benefit. This is the amount of money that your beneficiary will receive. In all cases, this is the amount given to the beneficiaries when the policy expires. Grace period. This is the amount of time that the insurance company gives us if in case we are not able to pay our policies in time. In this grace period, we are still protected. So they are giving us a chance to be able to recover and continue paying our premiums in order for us to stay protected. It is good that we continue paying for our premiums to avoid lapses. Lapse. This means that our policy is no longer active or we are no longer covered by the insurance company. This happens when we stop paying our premium and our grace period expires. So if this happens, it is still possible to reinstate our policy, but we need to let the insurance company know or our financial advisors know as soon as possible. Life insured or policy owner. This describes the person who is covered by the insurance policy. Maturity date. This is a pre-agreed date on which the policy term ends. A policy is no longer effective after this date. Payout. This is a fixed amount of money that the policyholder receives in regular intervals. This depends on the type of policy or product that you got because some of them have payouts and some of them don't. Premium. It is the payments that we make to the insurance company in exchange for our insurance policy. So this is either paid monthly, quarterly, semi-annually, or annually. Some companies offer cheaper premiums if, for example, they pay annually versus semi-annually or versus quarterly or versus monthly. So it's up to you to select what type of frequency of payments would you like to get. Once we set a mode of payment, we can also change this in the future. Policy. This is the contract between the insurance company and the policyholder in which the insurance company gives financial protection to its policyholders in exchange for regular payments or premiums. Riders. These are optional add-ons or additional coverage that you may place on your policy. It typically gives us additional benefits and additional protection, but it also equals a higher premium. Underwriters. These are the people who assess our insurance policies whenever we apply for an insurance. Their role is to understand our risk profile and assess and determine the right price for our insurance policies. It is important for them to know all of the facts, such as pre-existing medical conditions, because this will be their basis and so that they can make a fair evaluation. So that's it, guys. I hope I covered most of the jargon terms that you are unfamiliar with. Just a disclaimer, this is for informational purposes only. It should not be considered as legal or financial advice. Anything that is listed on the contract or the policy between the insurance company and you as the policyholder will always prevail. Let me know in the comments below what you think and if I missed anything on this list. Please don't forget to subscribe and hit the bell button to be notified for more videos similar to these. Thank you so much, guys. Bye!